Hello, it's Richard Bowser here from Property Investor News. I'm here at the Auction House London event, Swiss Cottage, the part of the Auction House group, and the auction taking place in the background, as you can see. We're just at the early stages of the auction, but quite a busy room here. A lot of people are attending this event. So I'm here with Ersin, who's a property developer, and he's just been taking part in the investment panel. So good afternoon, Ersin.
Good afternoon.
Ersin, tell us a little about yourself. What is it that you do?
I'm a businessman of about 35 years experience, of which 25 years has been in the property sector, investing, developing. This has been in the UK, and I've done it internationally as well.
And what sort of properties do you tend to focus on?
I focus on a broad range, basically, from lower-end properties to luxury. London and in the home counties and on the south coast.
And so you've got a lot of experience. And are these sort of blocks or single lets or?
Again, across range. So if we're talking about investing, they're houses and blocks of flats. But if it's developing, I have done. I don't do so much of it now in central London, in Kensington and Chelsea. Reconfiguration of buying a lateral flat, refurbishing it, and then selling at a profit. Now I do more so on the lower end of the market, where I'm buying a block, getting permitted development rights, turning it from an office to residential, or building brand new builds.
Okay, so you've obviously got a lot of experience, and so we're talking specifically about what you've just said about the fact that obviously central London 20-25% price drop, and also the previous model that you used, maybe buying a high-end flat or whatever and reconfiguring it. That's not a model, obviously, that you think is appropriate at this time.
Exactly. I've not bought anything on the luxury end for the last 3 years, and I was looking at one particular project with a joint venture partner in Mayfair. And this joint venture partner is a very experienced developer in the Mayfair area. However, the project I looked at, again, just looking at the calculations and the uncertainty, I decided not to. This was very recent, so it still doesn't work.
Right, I understand exactly what you're saying. Obviously, there's a lot of uncertainty around, and obviously Central London has been impacted more specifically. So based on what you were saying on the panel, by the sounds of it, you're more looking at the commuter areas around Greater London and the inner southeast?
Great, yeah, that's exactly. Where it does work are in locations where it's on a commuter line into London, mainly the home counties. I mean, people are willing to travel up to an hour from work by train, where they're paying far less for a property, they have better quality of life, and with the good train links, this has made it very, very easy to do. So they're the areas that I'm looking at.
And the permitted development you mentioned earlier, what are you seeing? Because obviously this has been a strategy that lots of people have been doing now for the last 3 or 4 years. Are you seeing that obviously the owners of these sites becoming much more aware of the value of their underlying asset, and therefore it's driven the prices up for these commercial blocks?
Yes, exactly. That's what's happened. Because when you're doing a permitted development, obviously you've got the building there already set up. So there's no infrastructure to do. You're just reconfiguring the internal of the office, mainly offices these are, which is much quicker, much cheaper and less risky. And you can work on lower margins because it's a lesser risk than a traditional new build.
And are you finding, therefore, because this has been sort of permitted development for office to residential, PD came in 2013, so that's sort of 5 years ago now, are you seeing a lot more competition for these types of sites, and that's impacting, on your calculations?
Yes, exactly. There's a lot more competition for office to residential conversions, for particularly the reasons I just gave before. So one has to be cautious, whether it's permitted development or land purchase, to be cautious as to what price you pay, because where you make the money is what you pay for it at the very start.
Yeah, some great points there, Ersin. Well, listen, thank you very much for your time today. So it's Richard Bowser with Ersin, from, and what is your company, by the way?
Syra Global Investments. Syra Global Investments.
Thank you very much, Sarah.
My pleasure.
Thank you.